Hello, Namaskar. You're watching BTTV. This is Market Today. I'm Tanya Aneja and with me Shail Bhatnagar, our markets editor. Well, Indian markets continue to remain in the bear grip, but where are the pockets of opportunities and what should be your strategy? We'll discuss this and much more, but first up, the top headlines for you. Weak overseas cues will ensure Indian markets continue to slide under selling pressure as bulls remain on the back foot on the Lal Street. October's FNO expiry draws to a close today with the Nifty at a 4-month low. Investors and traders remain extremely cautious on the long side as the global risk of trade in equities strengthens due to weak results from Google and Facebook. Safe haven buying continues in gold as the Mideast war rages between Israel and Hamas. Very good morning, Shail. It's a fresh Thursday morning and it's so good to be, back here in Delhi. But markets, that remain to be in the bear grip. If we talk about yesterday's trading session only, Sensex crashed around 523 points to settle at 64,049 odd level. Nifty also breached that 19,200 mark, and even broader markets, they were also under pain. So now I would like to understand from you that what should be the strategy at this point in time and where do you see Nifty going forward?
Good morning, Tanya, and a very warm welcome to thousands of viewers who are joining us from different parts of the world. It's the monthly expiry of October today, and so far the Nifty is down about 2.5%. The Bank Nifty has shed 4% in this particular series, and things look fairly bleak as far as bulls are concerned. All sorts of geopolitical issues are creeping into the Lal Street, and remember, all these pains are led by overseas changes that have happened in sentiment. As far as India is concerned, there is no need to worry, but the fact remains is that global markets are linked, and so are Indian markets to global markets. Therefore, that's the pain that we are seeing now slowly creeping into India. The Nifty, as you rightly mentioned, is at a 4-month low. This level was last seen in June 30th, down about 160 points yesterday at 19,122. Tanya, the issue here is that none of the so-called strong support levels are holding. The moment the Nifty hits 19,500, it slips lower below that. One was presuming that 19,500 will act as a very strong support. Yesterday, 19,200 was supposed to be a very, very strong support level if you were to listen to all market pundits, but it fell in less than 1 minute. So these kind of things are happening, and it's the global risk of trade because of geopolitical fears, because of the 10-year US bond yields now rising further up again. There's a very, very safe haven buying happening in gold and crude oil. Both of these are anti-equity stances, and therefore, as you rightly mentioned, global equity risk of trade is in place. If you see how the Dow closed yesterday, how you see the pain that is happening in the Nasdaq, all these point to second quarter results or quarterly results not helping either Wall Street or the Lal Street. Today, Indian markets will react to Tech Mahindra to Axis Bank. But there is more pain in the offing simply because the build-up of shorts as also long unwinding within Nifty is of about 37, 38 stocks out of 50. So the net positioning is on the negative side, which is favoring bears. So that's the strategy. Again, talking about supports, fresh ones have opened up at 19,100, 19,000, 18,800, 18,900, but most likely, you see a further dip as far as Nifty is concerned. The one good point about the Nifty is that, the 200-day moving average is somewhere like 18,800. So my assumption is that we are already at 19,122 and it's about 200, 300 points away from here. If we've traveled the distance between 20,200 to 19,100, this is just 300 points away. I think you'll see a move coming towards 18,800 value. Not now, but over stages.
These are the levels that one should watch out for, the support and resistance levels. But remember, markets continue to remain volatile and in the bear grip, of course. And we have Nifty that settled around 19,122 yesterday. It was down around 159 points, and Sensex also tumbled around 522 points to settle at for 64,049 odd levels. And there on your screen are the top gainers in yesterday's trading session. So of course some of the counters from the metal pack that were the top gainers in yesterday's trading session. But now let's do one thing. Let's understand that what should be the strategy when it comes to Bank Nifty, because if you look at the Bank Nifty as well, the trend is down. Index is below the 200 daily moving average and at a 5-month low. So Shail, let's come to you now and understand that what should be the strategy when it comes to Bank Nifty.
So Tanya, more pain as far as Bank Nifty is concerned. You very rightly mentioned that it's already below 200 DMA, and this kind of pricing was seen in the first week of May when the Bank Nifty was somewhere around 42,322. It's a 4% cut in Bank Nifty as far as the October FNO expiry is concerned, and all 12 stocks are showing very strong build-ups towards the bear side. So it's a bit of a pain as far as Bank Nifty is concerned. When you look at the support levels, you are seeing fresh supports coming in at 42,500, even 42,000. So it's a bit of a further pain as far as Bank Nifty is concerned. We are going to react to Axis Bank earnings today, which in any case are very good. But you see, neither the individual stock nor the main index is reacting positively to these developments. So we've seen disappointment in HDFC Bank despite very smart earnings. We've seen disappointment in ICICI Bank after very smart earnings, and most likely it's going to be a bit of a weakness as far as Axis Bank is concerned. Remember, Axis Bank was one of the strongest private sector banking stocks over the last 2 weeks, but this again has succumbed to selling pressure, now trading at its lowest level since August 2022, and this high was at about 1,043, which the stock is now at 955. The 200 DMA is at 940. This again will approach its 200 DMA, Tanya.
Okay, absolutely. That's the strategy for Bank Nifty. But let's discuss FNO space as well, Shail, because lot of action happening there as well. So what are you looking at in the FNO space today?
Tanya, I think it's best to be more end of the trade as far as markets are concerned within the FNO space. Today will be a day of pause. We'll look at rollover data and then maybe take some kind of a sensible view starting Friday. Today we'll just sort of chill out.
Okay, absolutely, got that. And let's discuss global markets as well, Shail, because if we talk about Wall Street, US stocks stumbled in a broad sell-off yesterday as Alphabet shares slid after the Google parent posted disappointing earnings, and of course as US Treasury yields rose, reviving fears that interest rates could stay higher for longer. So Dow fell around 0.32% there on a screen at 33,000. Nasdaq 2.43%, steep cut there, 12,821 is the level, and S&P 500 also 4,186, down around 1.43%. Oil prices, they rose about 2% on Wednesday, and gold also continues to rise. So what is now essential to track from all these overseas cues, Shail?
Tanya, I think we have our pre-open rates. Let's look at them first. The global markets in any case will get reflected on how pre-open rates shape up. Nifty is down 45 points, 19,076 in front of you. So the battle today between the bulls and the bears will be at the 19,000 level. Remember, if the index slips below 19,000 in today's trade, this will be the first time since let's say 28th of June when the index was at about 18,940. Let's see how Nifty shapes up. But for the moment, the beginnings look a little weaker. As far as the Nifty 50 is concerned, Tech Mahindra is the top gainer, reacting to earnings 1.5% higher, 1160. Kotak and Axis Bank are showing some kind of strength, 0.5% and 1.33% higher. I'd like to look at what Reliance and HDFC Bank are doing. At the moment, Reliance is down 0.75%, 2241, and we have a fairly strong move and a fairly negative move coming in HDFC Bank, down 0.5% at 1490. So this is how the structure is immediately. Even the Nifty, even the Infosys counter is showing some weakness, 0.3% lower, 1365. So if three index heavyweights, which is HDFC Bank, Reliance and Infosys, are down, that essentially means that we are going to see a negative day even on the monthly expiry of F&O contracts. All shorts which are in the system are likely to be rolled over to the fresh expiry. Let's see how that structures happen, but at the moment it's a negative 66 points lower at 19,054. Tanya.
Okay, absolutely. And Rajesh Palvia, he's also joining us in a while. But meanwhile, okay, I think he's with us. So let's welcome our market guest on the show today. We have with us Mr. Rajesh Palvia, who is the Head of Technical and Derivative Research at Axis Securities. Good morning, Mr. Palvia. Always good to have you on BTTV. How are you positioned on Nifty at this point in time, and what are now the fresh support and resistance levels that one should watch out for?
Good morning, Tanya. Good morning, Shailji. Good morning, everyone. So, trend is likely to remain on the bearish side only, as we have broken all important support area ahead of this expiry, October series expiry. And looking at the put-based concentration, that is still not visible. Even put writers are on the back foot. So there is no as such a major support is for the market at this moment. 19,000 is the only hope, that is the psychological level, as well as the maximum put writers are there at 19,000 strikes. So that's the only area where we can find some support buying action. But if at all, if we slips below to 19,000 level, then possibly we may go further down from the current level, as the call writers are very aggressive at 19,300, 19,400. All strikes are captured by the call writers. So that clearly shows that the trend is likely to remain on the bearish side, and whatever pullback, minor pullback we are going to get in market are going to get supply pressure on the higher side. So though PCR is showing that we are in oversold trajectory, some pullback action can be there due to this oversold zone. But if we analyze the overall broad-based setup for the market, most of the sectors, most of the segment like large cap, mid cap, small cap are getting more supply pressure since last couple of trading sessions. So that clearly shows that sentiment is very weak at this moment, and I don't think until the Nifty not crosses above 19,450 level will get any kind of comfort in the market. So only 19,450 will give some comfort to the near term to short term trader at this moment. Otherwise, sell on rise should be your strategy at this juncture. 19,000 250, 19,300 should be your stop loss to remain on the short side. 19,000 is the first target, and if it breaks, then 18,850 would be the next level for the Nifty. And on the Bank Nifty, as we are now trading at below 43,000 level, and if it remains below to 43,000 level, then possibly we may take a hit also in Bank Nifty also, and then it may go down towards 42,500, even 42,300 level on the downside. Again, Bank Nifty is also in an oversold trajectory. So only high risk trader can take a bet at this level, because risk reward is not in favor even to go long or on short. So maybe your trade size should be low at this moment, because we are on expiry day. A lot of volatility is going to play out due to rollover action.
Namaste Rajesh ji, and welcome to Business Today Television. Indeed, as you very rightly point out, 19,000 has sort of disappeared, and at risk today is, like I mentioned, 1900. 18,800 is a very strong support for the Nifty as far as the 200 DMA is concerned. Let's see whether we reach there or we see some kind of a support. Any one or two stocks that on the long or the short side that catch your fancy as far as charts are concerned, as far as option chains are concerned, and then we'll discuss rollovers.
So I think, Shailji, one can look at the Bajaj Finance to go short at this moment. Post earning stock is correcting now. This is the third consecutive week where we are seeing lower high low formation. And in this kind of market, the stocks where we have seen a rally in recent past are, getting more supply pressure. So Bajaj Finance is looking weak, and we believe that, this stock may go down further towards 7,600. 75 60 level on the downside, so one can go short in Bajaj Finance with stop loss of 7750. The other stock that we feel can show furthermore bearishness, that is from cement space, that is ACC, is looking weak at this moment. Stock has given a breakdown of its last 4 5 week consolidation range on the downside. And looking at the near term short term setup, we believe that stock may attract further more supply pressure towards 1860 1850 on the downside. So one can go short in ACC with stop loss of 1910. These two stocks are looking weak at this moment.
Okay. Fair point, and Mr. Palvia is a very well-known trend follower. Both stocks, for the moment or for the last 1 week, have shown signs of weakness. ACC in particular is now trading at its lowest level since July of 2022. So that makes it a 3 month low. July of 2023. That makes it a 3 month low, and this is the pain that is there in the system. Nifty settled 94 points lower at 19,027 as far as the pre-open trades are concerned, and all 10 index heavyweights are in the red, led by Bajaj Finserv 1.3% lower 1590, Infosys a percent lower 1335, Bajaj Finance 1% lower 7625. Weakness across the board in the banking space. SBI down 0.85%, 551, and we have ICICI, Kotak and Axis also flat. The bank Nifty is likely to open 123 points lower, 42,708. Mr. Palvia, when we talk about the rollovers, where do you see strength, either sectorally or how about individual stock futures? Anything that is catching the fancy of whatever number of bulls are left on Dalal Street in FNO on the long side, sir?
So I think a very limited opportunity at this moment on the long side, because some buying interest towards the rollover. Some long rollover activities happening in telecom, power and capital goods. So these sectors one can look at this juncture. So I think overall structure is weak. I think final rollover data will give us clarity for further, course of action, how the market is going to behave. Till now, it's a 62% rollover compared to the last expiry on Wednesday. So I think it is in line with the last expiry, but again, the final rollover data will give us the clarity in terms of how the after this, breakdown below 19,300, 200, how the traders are taking their position for next series. Again, the sentiment across the globe is also on the bearish side. So nothing as such, looking promising at this moment. I think one should stay light at this juncture. Let this selling pressure to settle down at certain point. Then I think the positions will, take place for the November series. So I think as per the current data status, we believe that the November series will be light in terms of rollover activity.
Okay, absolutely got that. And we also have with us now Mr. Abhishek Jain, who is the head of research at Arihant Capital. Mr. Jain, very good morning. Good to have you on BTTV. Markets continue to remain in the bear grip, and 19,200 level, that is also now gone on Nifty. So where are the markets headed according to you in the near term, and what should be the strategy?
So our view is very simple. As I mentioned last time also when I came to your channel, I continue to remain very stock specific approach because I'm not comfortable with the kind of valuation some of the sectors are getting.
Right.
And we've been started liking some of the companies like in especially I've spoke to the sir also. Good morning, sir. About the agrichem space also, where I believe there is an opportunity is there right now where we can take a 2 year call or maybe next 6 to 9 months call. That can be a very interesting sector to bet on. Also, I believe some of the companies like in the consumer durable space, despite the commentary, our numbers were slightly weaker side, can definitely have a look. Like Voltas is something we believe can be a good opportunity. On the financial side, I think there will be again stocks specific approach is there right now. So I think Axis Bank has posted good numbers, and I think if it comes down to at any level of 900, 920 can be a very good opportunity. So stock specific approach we are been maintaining for a quite some time. We are not comfortable with the valuation some of the high flying sectors were getting. So we were expecting this correction. So we've been advising our client to remain be stock specific and increase their cash exposure. There are some companies which has posted not so great result, but definitely worth looking is SW Solar is one company where we think Reliance execution opportunity is huge for the company, and there's on the another side there's a company called Mahindra Logistic is there right now. I think Mahindra Logistic is something which we like. So there will be stock specific opportunity, and we are bottom pickers, so we think. There are stocks where you get an opportunity to accumulate. These are they are good times to accumulate. We may see this downturn for maybe a month time or
Right.
something like this. And we have seen 6 7 months of mid cap super outperformance.
Right.
So I don't think so.
Uh,
We should take this as an
Abhishek,
opportunity.
good morning. Good morning, Abhishek. Welcome to Market Today. The markets have opened. Please allow me 1 or 2 minutes to mark
So your
stock
voice is
prices.
not
Then
coming.
we'll come back to you in just a jiffy. So we'll fix the sound issue. 99 points lower on the Nifty. 19,023 is where the FNO expiry today starts. It's a 165 point cut on the Nifty Bank. 42,650. The Nifty IT has gone down immediately by 1%. 286 points lower at 30,246. Okay, as far as the Nifty is concerned, it's opened gap down of about 95, which we've already discussed, but it is at the first support level of the intraday charts. Let's see how it works. Now, what are the contributing stocks which are causing this pain? Firstly, I want to see Axis Bank, strong earnings and a very, very strong welcome given by the market despite the overall weakness. So Axis Bank is 1% higher, 965. Remember, we had discussed this as one of the finest private sector stocks showing a lot of strength despite general weakness all around. Okay, what is ICICI Bank doing? It's up in sympathy with the Axis, 916, flat at the moment. I want to see what Reliance is doing. Reliance at the moment is 0.5% lower, 2248. How about HDFC Bank? 1474. This is the culprit for today, down 1.5% already. And remember, it's the first 2 or 3 minutes of trade. So the weakness in Bank Nifty is because of HDFC Bank, and it's being offset partially by both by both Axis and ICICI Bank. Even State Bank of India is down about 0.9%, 551.70. How about ITC? Again down 431.60. Hindustan Unilever again down 24.70. So apart from Axis Bank, all the 10 index heavyweights are down, and that does not augur well for the Nifty. Ladies and gentlemen, We'll just see Nifty slipping below 19,000 at Jiffy, and this is the price that we last saw on 25th of June. So weakness spreads across the board. Nifty is down 120 points. Let's look at the FNO space minus the index heavyweights. The top gainers are, of course, Axis and IndusInd Bank. So about 190 stocks in FNO, and just 4 are in the gains. Let's look at the top losing list. Tech Mahindra, post earnings 2.5% lower, 1114. L&T Housing Finance 2.5% lower, Syngene down 1.5%, 683. We have Coromandel, Hindalco, M&M down anywhere between 2.1 to 2.3%. It's a sell-off that's gathering steam. Let's shift focus to NSE 500, and let's look at the top gainers here. Sona Comstar, post earnings 3.5% higher, 533. Sonata Software 1061, up about 1.2%. We have KPIL at about 665, down 0.2%. CSB Bank in the green, 324, 0.5% higher. IndusInd Bank 0.2% higher, 1415. There isn't much strength here. In terms of top losers, we have MMTC 54.55, down 5%. Circuit, Welspun Industries, which was up very sharply yesterday, is now down 6%, 133. This is how the structure is. Coming to you first, Rajesh ji. How do you see this opening? 19,000 is something that seems to be at least initially being defended by the bulls. Your prognosis for the Nifty?
So I think, Shailji, there is no as such a buying interest even despite gap down opening. I think 19,000, we are just trading around 19,000. But I don't think that will also hold, because the kind of supply pressure which we are seeing since opening in across the board is clearly indicating that, bulls are on back foot. They are not buying at this moment. So I think for the expiry, I think furthermore pressure we may see. So 19,000 is the only hope at this moment. If at all, if we hold some pullback, we will see. But I don't think that 19,000 will be able to hold. I think that level may break, and we may go down further towards 18,900, 18,850 kind of level on the downside. Because as of now, post opening, nothing as such encouraging in terms of large cap stocks are not participating at all, and mid cap stocks as well as small cap stocks are continuously bleeding since last 2-3 trading session. So I think that clearly shows that sentiment is very weak at this moment. Nobody wants to venture out at this juncture towards this expiry. So I think one should stay away at this moment. Don't try to bottom fish. Even the market is already corrected so much, but I think one should stay away at this moment. Let the supply pressure to settle down at certain point, then only one should look at to buy the stock. Though a lot many stocks have corrected significant and are available at very attractive levels, even if we analyze on the
Right,
monthly.
sir.
Yeah. So that's the view at this moment.
Right, sir. Yes, let's be cautious. At the moment, Nifty is below 19,000, and this is the level that we saw on June 25th. So it's clearly a fresh 4-month low as far as the index is concerned. Abhishek, coming to you. As a group, Arihant is known for bottom fishing in troubled waters, and this is where the maximum amount of gains are made over the medium term, say 2-3 months. Any stock or any sector that you find in particular which is now trading with the weakness that you would like to add in stages?
So there are two stocks I can talk about. The sector agrichem I have already mentioned earlier, sir. One stock which we would like to add is Tech Mahindra at this point of time. The numbers are not interesting as per the market is there right now, but our view is very simple on the Tech Mahindra. This is they've been going through a transition, and this transition may take 1 or 2 quarters pain right now, but I think that can be a very good opportunity for the investors to get into the stock at 1100 rupees. I think Tech Mahindra I'm not saying it discounted all the negatives or this thing, but I believe this can be a good dark horse in the sector right now. I believe the share of financial services with the new team of Infi has joining the company right now should do augur well for the company. Also in the core telecom space, also I believe there will be a recovery in FY25. So these two calls, which I think is like Tech Mahindra is something where I think there's a lot of value in the stocks, and when the investors should start accumulating the stock.
Tech Mahindra is something that should be shown on the screen. The longer term chart shows this level was last seen on July 31st. So again a 4-month low, and Tech Mahindra has corrected from 1319 rupees to somewhere like 1100 rupees. Remember, this gap down because of earnings is resulting in the stock quoting below its 200 DMA, and if you stay with us till 9:45, the corporate radar today will have the top management of Tech Mahindra talking to Managing Director Mr. Siddharth Zarabi. So stay tuned till then. But for the moment, as I had mentioned, the weakness on the Nifty is now getting fairly stronger. We have a 150-point dip on on the Nifty, and it's still 925. So first 10 minutes have been painful, and remember today is the monthly expiry. Rollover of shorts seems to be happening at strength. 18964 in front of me, and the second 5-minute candle is worse for bulls than the first 5-minute one. All the major stocks, Adani Enterprises, M&M, IndusInd Bank, Nestle, TCS are trading at their respective days low. Let's look at the advanced decline ratio when it comes to the Nifty. I'm sure there's a lot of pain here. The Nifty advanced decline ratio, ladies and gentlemen, is 1:49. There are two ways to look at it. The worst that could happen has happened. You can't have all 50 in the red, and the only one in the green is Axis Bank. I wish Mr. Palvia was kind enough to give us his views technically on Axis Bank, but he won't. The advanced decline ratio in the broader markets are hugely negative. I haven't seen this picture in the recent past. 1700 stocks are in the red and just 160 that are in the green. As far as the Nifty 500 is concerned, 486 stocks are in the red and just 14 in the green. Coming to you, Abhishek ji, you've seen quite a few bulls and bear markets. With this kind of negativity and the fact that the 200 DMA is fairly close on the Nifty, are these levels where you would suggest some strong-hearted people to buy the Nifty ETF?
I think it's better to buy being a stock specific approach rather than going for an ETF right now. There is obviously for a mutual fund guy or a common investor, the ETF is not bad thing to get into the market right now when you want to take a call. And there's nothing like I've been telling, there's nothing fundamentally has changed in last 15 days. But the market, I mean, nothing has changed in the last major in the last 3 months also when the market was booming and everyone was so positive on the market at that point of time. Also, we need to be uh, very cautious because it's all about picking it's not picking the right stock. It's basically avoiding the wrong stock is the key important thing in the this kind of irrational exuberance what we have seen in last especially in the 1 quarter. And I still believe there is a lot of froth is there in especially on the SME side is there right now. One need to be very cautious. One need to people have stopped looking at the valuations and just looking at certain breakouts and charts and everything, which I totally respect the view. But I think the valuations is extremely important comes into the picture when looking at the companies right now. And I believe market can correct to both side also. I and the market is also looking after the state elections which are happening, and I believe there will be a range bound market or maybe a slightly negative bias. We've been telling same thing to our investors. So be stock specific. Don't get out of them. Valuations are still not very lucrative, but I think you can have a look at some of the companies in the sectors which should do well. And one stock where we like is, as I mentioned, is Tech Mahindra is there, where we are taking a 2 year call, and we think this can be a very interesting stock to be on our radar right now. Second stock, again, on the large cap side, after the results, we would like to have a look at UPL also, where we think post Q2 things will start picking up. So we are not taking a call right now, but we think after the results, one can definitely have a look at UPL also.
Okay, absolutely, Abhishek, got that. And what are your thoughts on mid-cap space, Abhishek? Because if we see Nifty mid-cap index also, that is down around 1.3% as we speak. And, we have seen a stellar rally coming in when it comes to, all these mid-cap stocks. But what should be the strategy at this point in time?
I would be like, again, I am telling, like, on the large pockets, on the pockets where you are seeing FY 26, 27 valuations, and your people are recommending buy. I think one should avoid those sectors, because and also there has been a rally. The stocks have become like 3x, 4x, and then the recommendation is coming. I believe we need to be very cautious on the stocks we are there right now. Also, as I mentioned at this point of time, for last 1 month, we were quite cautious on the PSU baskets. So PSU is something where I believe there's a valuation uh, maze is there right now. It's always you'll find some of the stocks have been always been cheap. So there's a last leg of rally. We have seen a lot of PSUs have done very well. It's not like this; they are not doing well, but I still believe. PSUs in terms with the valuations, and will get a valuation lower than the private ones because of the execution side. So there will be some stocks. I think we need to be very cautious at this point of time while picking up the stocks. That's what I can say. Especially in the mid cap side, also the stocks have become 10x or 5x and 3x or 2x in last 6 months. So don't want to be on the wrong side of the market. So be very stock specific.
What about you, Mr. Palvia? What are your thoughts on mid-cap space and any thing that you like from that space?
I think, Tanya, in these kind of market, I think one should avoid mid-cap space also, because maybe valuations may be attractive for some of the stocks. Stocks have corrected significantly in last couple of trading sessions, but the mid-cap stocks generally perform when you have comfort zone in the market. If you look at the overall market breadth, it's a very deep red at this moment, a very negative market breadth since last couple of trading session. And day by day, we are seeing that very few stocks are able to hold out their breakouts. So I think till this supply pressure, till the Nifty or Bank Nifty not able to hold out at a certain level, I don't believe that mid cap space will attract some buying interest at this moment. So for trading point of view, I think I'll avoid at this moment. Let the Nifty benchmark index to settle down at certain point. Let this rollover activity to happen, then only I think we should review again the situation of market, as there is no as such positive trigger at this moment for the market, as the global cues are also negative. Nothing as such encouraging from the global cues. We have seen yesterday that the Google share was dropped at around 10%. So these kind of the news flow and these kind of impact, these all impact our markets also at this moment. So I think mid cap one should avoid at this moment. We may see further more corrective move in couple of trading session for mid cap as well as for the small cap. So we are not buying at this moment. We are on the sideline at this moment for on the mid cap space.
Yes, and absolutely, there is no reason or no compulsion to buy a falling knife, and you see that sort of getting fairly widespread, not only on indices but also on stocks, where Abhishek pointed out that valuations were stretched, especially in the mid cap sector and more importantly in the PSU space. You've mentioned, Abhishek, Tech Mahindra. What are the two or three things that you would, sort of like about the earnings that came in, and individually about the company that prompts you to, buy this dip that we are seeing in front of us? Tech Mahindra now down about 2.5% at about 1105.
Already mentioned in the pipeline side, they've already talked about the deal pipeline has been very strong for the company right now. Also, they have talked about the telecom vertical has been the turnaround right now. Also, they have very decent client portfolios with companies like BCCI and Mahindra Electric car racing and chess events and other things where the collaboration is also they are doing it. They've won on the Q2. They have seen a $640 million large deal spanning in the fintech side, digital transformation, and telecom network side. And the new organizational structure they have talked about will start coming into the picture for January 1st, 24. So that will also the focusing on streamlining the existing relationship and deepening the client relationship which they are having right now. There's been some reduced 5G related transfer budget at this point of time because of the existing market conditions. But I think there are companies and in this quarter, if you see right now, on the quarter-on-quarter basis, there is a certain forex loss was also there, which was there not there in the Q, which impacted the margins. They've been right now focusing on AI side at this point of time with the training of more than 10,000 players are there right this point of time. They were also talking about they're going to reduce the subcontractor cost and I think this can and also will increase the offshore side of the business right now, where I think there is a scope for the margin improvement. Our analyst also has been quite positive. Have we think that can be a stock winner so if you have a view of 2 years down the line. And also, I think there is a stock which has been there. It's main on the guy who has joined from the Infosys should deliver for the company and increase BFSI as one more vertical for the company.
Okay, absolutely. And Mr. Palvia, coming to you now for Tech Mahindra, what are your thoughts after the weak second quarter results?
So I think nothing as such encouraging on the chart. The stock now slipped below to 200-day moving average. Looking at the near-term, short-term setup, the stock is now trading almost near to its July 2023 low. So the ray of hope only is around 1100 level. That's the only area where stock may try to find some support buying action. If at all the stock slips below to 1100 level, then possibly we may see furthermore extended selling pressure towards 1050 level also in the continuation of this fall. So overall structure is looking weak since last 4 5 week. Stock is continuously forming lower high low formation. That clearly shows that there is a sustained supply pressure and liquidation is taking place in the stock at this moment. So I think one should wait to settle down. 1100 is the immediate level where we are already trading around those level. If it slips, so then I think another 4 5% correction we can see in the continuation of downtrend. So 1050 would be the next level where we will again review it again to buy around those levels. But at this moment we will avoid Tech Mahindra.
Okay, absolutely. And also, gentlemen, let's discuss some of the sectors also. So, overseas investors, they have offloaded shares of power, construction, and IT sectors the most in the first half of October. And actually, the power stocks, they saw the highest outflows in this time frame. So coming to you, Abhishek, first for this, what are your thoughts, on power, construction, and IT sector? And in IT sector, if you could tell us more about mid cap IT and large cap IT.
Ma'am, if we think right now on the mid cap ITs, I don't believe in this theory that there will be some mid caps IT will do better right now. There will be one or two instances we can see the stocks can do well, but I think if large cap IT or US spending, the people are talking about purchase slowdown, especially in the Nasdaq breakdown, people are talking about right now. I think it won't be possible for the players, certain companies to do well right now. So, if your Infosys and TCS of the world is not giving a good commentary, I don't think so. There will be a mid-cap IT should get a justification of getting a higher valuation just because they are doing 1 or 2 quarters. Because I think in the longer period of time, the kind of cycle-wise which they have played out, most of the IT companies, especially on the mid-cap side, large-cap companies side, they are much more diversified at this point of time with the client allocation and other things. So I think one can definitely have a look rather than looking at the companies in the sectors right now. I believe one should start adding some of the stocks in the tranches where you are finding values. But stocks are really expensive at this point of time, and I won't recommending just a buy call on the basis of recommending stock at this point of time. But some of the stocks like TCS TCS Infi and other things have also started getting into a good valuation comfort at 1300 odd level. Infosys is a great buy, and 32 or 3300 in TCS is also, with the buyback is going on. TCS offer good value at current valuations also. Can
And
be
what
a good
about
trading opportunities.
power and construction?
Construction, I think there's a good order book on the government spending side also, and on the real estate side also, and in all the infrastructure. But the problem, ma'am, which I think there are two important things in this market. There's a risk is there. The like even a small risk is there. There is a change in government which can slow down the impact. Also, the second important thing, which I believe the stocks are no longer cheap in the sector at this point of time. Second important thing where I think some of the IT companies, some of the construction companies can have like real estate side. We have seen some surge in the raw material side again. So this may impact your construction cost again going up at this point of time. The government spending has been benign, and I think government has been supporting the sector because of the pre-election push which we have seen and which will remain. So you have to be very stock specific view with the companies. I can talk about a company which is a very niche margin in the construction, or maybe another, you can say in the infrastructure side, is Ramki Infra. I think and the stock has been there, has become a multi-bagger for some of the investor. But if you see, they have been in a very niche space in the affluent side, and they are the development side where the margins are much more superior than the peers at this point of time. So I would like to have a view on very stock specific approach rather than just buying anything on the basis of correction.
Okay, absolutely got that. And what about you, Mr. Palvia? Is mid-cap IT space looking better than the large-cap IT?
So we have seen some of the mid-cap stocks from IT side have done well in recent past, but again, due to this supply pressure in market, again they are also witnessing the same kind of behavior at this moment. But looking at the technical setup, I think one can look at Coforge in this decline. Stock is now slipped below to 100-day moving average, but even if you look at the overall structure for the stock, I think there will be a good support area around 4700. 4650 level on the downside. So I think we can look at Coforge in this decline to buy around 4650 level. Birla Soft is also looking promising from the mid-cap IT space in this decline. And now stock is almost trading near to its support area of 505. That is coincide with its 50-day moving average. So I think once this supply pressure settle down at certain point, I think Birla Soft may show again, a good bounce back from those levels. So 505 is the level where we are keeping eye to buy on the downside for this Birla Soft. Our stop loss would be at around 490 to buy this stock.
Okay, absolutely. And let's discuss, Asian Paints, Vodafone Idea and PNB shares. These companies will be posting their numbers today. So coming to you, Abhishek, first, what are your thoughts on Asian Paints, Vodafone Idea and PNB ahead of their numbers?
Idea numbers are expected to be on the weaker side only. I don't think so. Any positive upside can be taken in the idea at this point of time till because people are talking about a fundraising, and they may do some Asian Paints, we've been negative. We think the stock can do good at maybe one more quarter is there right now. But we have seen a lot of consolidation in the industry right now. Like some of the players, apart from the new players which people are talking about, some of the players let's Shalimar and other players are there right now, and even MRF, which were not there in the picture 2 years back, much more stronger. They have come out, have become very strong, and they have started. JSW have started getting into the picture right now. So I think you have to be very cautious while buying stocks at this point of time, rather than looking at the companies where you are finding value is there right now. So I think Asian Paints can see one more good quarter, maybe in terms with margins. You may see some surprises are there. Q2, we have seen less number of rains are there right now. So you may see construction activity. So earnings can do well, but we are not that positive on the stock at this point of time.
Okay, absolutely. And what about you, Mr. Palvia? What are your thoughts on Asian Paints, Vodafone Idea, and PNB?
So Asian Paint is in corrective move. If we analyze the overall structure, this is the third consecutive month where we are seeing that continuous supply pressure is happening in the stock. Stock is now slipped below to all its near-term, short-term moving averages. Looking at the structure, I think that the next major support on the decline is at around 2960, 2900 kind of level. So I think another 3-4% kind of correction we can see in Asian Paint in the continuation of this down move until the stock not crosses above 3100 and 3100 3110 level. The minor pullback will attract to the supply pressure. Again, idea is very range bound kind of stock, nothing to trade on the basis of technical. It's stuck in very tight range of for 13 rupees to 10 rupees. This is the range where we are seeing that stock is consolidating since last couple of weeks. So I think nothing to take any call on the technical side for idea. But PNB, yes, there is a corrective move is happening in the stock now. Stock slipped below to 50-day moving average, but we still believe that if stock manages to hold 65 level, then some pullback action we can see in the PNB. That's the area where the stock is having major buying interest. So 65 is the important level to watch for in this decline. If stocks holds those levels, then I think one can look at to buy this stock with stop loss of 63. Again, on the higher side, 72 and 75 are the challenging level to cross. But if stock crosses those levels, then I think it may resume its uptrend, and then we can see further higher level. But I think looking at the market condition, looking at the sentiment, I think one should be light. One should buy a very low quantity even in this decline. Though stock is available at very attractive price and near to very important support area, but I think one should buy in very low quantity rather to buy in a one go.
Okay, absolutely got that. And meanwhile, Nifty is now down around 188 points, trading at 18,933. That's the level for you. And if you look at some of the losers from today's trading session, we have Tech Mahindra also. That is among the top losers for you. And we'll pull up the losers on your screen now. Bajaj Finserv, one of the top losers for you from today's trading session. 1568 is the level where we are at, completely selling across the sectors, and Hindalco also, some of the metal counters also not supporting the markets as we speak. 450 is the level for Hindalco, one of the top losers for you, and Tata Motors, Coal India and JSW Steel, some of the other losers for you. Coming to you, Mr. Jain, for metal space, because we have seen some of the selective counters from the space participating in yesterday's trading session, but now today if we see they are all among the top losers. Any stocks that you like, especially when it comes to the buy on dip strategy from the metal space?
I would like to wait for the metals. Metals, I think, is like still not. We are not seeing any. I think there will be some opportunities. You may see in yesterday there is an announcement from the China. They'll be pumping economy, but that's why we have seen a rally. But global, still, if you think right now the metals, the risk reward ratios are not in favor at this point of time. You may see strong Q3 for some of the companies. I won't buy a stock like Hindustan Copper or some of the companies where the valuations are not there. But I think. on the value. There's a steel in the steel stocks. Will definitely one can have a look where opportunity is there right now. I believe some of the companies looks interesting at this point of time. Maybe in the steel side, a sale at 80 level can be interesting bet for the portfolio. Or second is JSW Steel. If you get an opportunity close to 700. The steel prices are relatively strong. The demand has been decent right now, but the stock has also moved up. So I think you can have a look at a very stock specific approach. I would be very circumspect in buying a stock which has become a 3x, 4x. So I won't be buying your favorites regular. I think like there are stocks mid cap genre, but the large cap side will definitely have a look in some of the stocks.
Okay, absolutely. And with that, thank you so much, gentlemen. Thank you, Mr. Palvia. Thank you, Mr. Jain, for sharing these valuable insights with us and being with us here on Business Today Television.
Thank you very much.
So now it's time to shift our gears to the corporate side, and the company on our radar today is Tech Mahindra. The company posted its biggest fall in profit in over 16 years as expenses mounted and clients tightened spending amid a tough macroeconomic environment. Business Today TV's managing editor Siddharth Zarabi spoke to Tech Mahindra's MD and CEO Mohit Joshi and CFO Rohit Anand. Listen in.
The results basically missing estimates and perhaps some bit of that disappointment reflecting in the share price. Tech Mahindra viewers down almost over 11% in the past month, and this is after hitting a 52-week high in July this year. But Mohit, I want to begin by asking you, is this really a case of a sharp cut in discretionary spends by your clients given what is happening in the global economy?
There is a weakness that we are seeing overall in IT services, which has been faced by all of our peers as well. And if you look at our own very specific portfolio mix, then the telecom unit has been the most impacted globally. It is the one industry which has been, facing a lot of the headwinds across the world.
Rohit, take us through the numbers, Rohit, in terms of breaking down the revenue performance.
That in the quarter, the way to look at the revenue breakdown is 1% of the drop can be attributable to discretionary spend cut, majority of that coming from the communication segment. The other 140 basis point quarterly sequentially declines driven by more our strategy to define our core and where we want to focus from a long-term perspective. In line with that, we've taken calls on stopping businesses in certain geographies, regions, product lines, and ending contracts that don't end up into that core portfolio. This is that we've had an impact on the revenue for the quarter, and that's also percolated down to margin. So that's the way to break up the impact on revenue.
How long will this portfolio rationalization continue? If I understood your answer correctly, that's what you seem to be hinting at, that the portfolio rejig is likely to continue for the near future.
Yeah, I think the way we're thinking about it is it's an opportunity for us to reboot in terms of where we are from a tough industry dynamic perspective. We're taking this time to relook at the organization, and a part of that we've started the exercise this quarter. Will continue as we get into the Q3 as well, this is a part of our long-term strategy which will define, and Mohit will come out and share with all of you sometime towards April. So from an actions perspective, we feel that at least defining our core and taking actions on the non-core side, we will get towards a good handle around towards the Q3 end.
Mohit Joshi, coming to you, from a sort of overall perspective, given what's happening to the entire IT space, and Tech Mahindra viewers is not alone in this regard, how long do you expect an uncertain environment likely to prevail for the IT sector? How many more quarters of pain, Mohit Joshi?
Look, I think it's hard to say because over the past few quarters and a past few months, there's been a lot of volatility, right? There's been a lot of volatility in the outlook. And again, given everything that is happening from a geopolitical perspective, the big questions are hard to answer, right? Have we finally seen peak inflation? Have we seen peak interest rates? Is there likely to be sustained growth from the 1st of January onwards? What path will the US economy take? These are harder questions to answer. But if we go beyond a quarter or two, right, I'm very confident that at the end of the day, the spend on enterprise tech and the kind of work that a company like TechM does, right? The deep expertise that we have in engineering, the deep expertise that we have in sectors like telecom and manufacturing, the emerging strength that we have in healthcare, financial services, in retail, the demand for tech services amplified by the demand for the cloud, amplified by the demand that we're seeing from a Gen AI perspective. I have no doubt that while we may have volatility for a quarter or two or three, in the long run, the outlook for the sector and the outlook for strong companies like TechM is very positive.
Whenever the recovery happens, what vertical is likely to lead that recovery?
Well, if you look at it from the perspective of now, right? If you look at it now, I think our manufacturing business has stayed extremely strong and very resilient globally. Now there are a few pressures that we're seeing because of the auto strikes, for instance, in the U.S. But overall, manufacturing has stayed resilient through the downturn, and I have no doubt that that is a sector that will stay strong. Healthcare, both payer and provider, again has remained resilient through the downturn, and I have no doubt that given the aging population, given the fact that this sector has really been a laggard from a tech perspective, that will continue to drive growth. I'm also in the medium to long term optimistic about telecoms, right? It is too important a sector and is too central to the global economy to be down forever. So I'm hopeful that we will see a medium term pickup in the sector as well, though it's harder to see that near term. And finally, look, I think financial services, retail, these are anchors of the economy, and I think as we go through the cycle, we will see continued strength over here because these sectors are uniquely dependent on technology for their very existence. But near term, I would say if I had to pick one sector, I would say manufacturing is probably the one that will stay the strongest.
Rohit, I want to come to you unless Mohit wants to answer that. And this is to provide our viewers a sense of the deal pipeline. How is it looking like over the next quarter or two?
From a deal pipeline perspective, I mean, if you look at the current quarter numbers, it's improved from where we closed the deals last quarter to now. But when we look at the pipeline for the future, while it's robust at an overall company level, we still see timelines to closure not being at the same level we were experiencing a year and a half back, right? So there's continuously some delays in decision making at a customer level for various reasons that's causing volatility in closure timelines, but overall the robustness of pipeline is quite strong as we get into the second half.
And looking back, the focus on doing smaller transformative deals, how has that worked?
I think from a business mix perspective, if you look at what's happened in the last, I would say 4 to 6 quarters, I think post-COVID there was a lot of industry change and a lot of transformation projects that were available, and we also as a company took a lot of transformation projects for our customers. But when you look at the change in mix over the last 4 quarters, I think it's getting more towards building a strategy around cost optimization as companies get more into crunch on servicing their debt, get more pressure based on the macro environment. They're looking at more vendor optimization, cost rationalization, and efficiency deals. So I think there's been a change in mix from a market industry standpoint, and also we see that same percolate down into our deal pipeline change reflecting in the mix as well.
And what we are also picking up from earlier commentary is that the company's won net new deals worth $640 million viewers in July and September. Mohit, if I can come to you about some of the forward-looking aspects, including comments earlier by the management that you will continue to invest in innovation and new verticals, and also a sense of the broader strategy as far as human resources are concerned, as IT services last 12-month attrition was at 11% in July and September, and your total employee count at over 1,50,604 as on 30th September. You seem to be among the very few companies, Mohit Joshi, which actually had a positive headcount increase of almost 2,307 employees in the quarter.
Yeah, so look, I think first of all, I'm very proud of the fact that we've had the best attrition rate in the industry, and just historically, this has been true for TechM. And I think the very low attrition rate has underpinned the resiliency that we have been able to provide to our clients, the extreme stability that we've had of operations, and the the very high levels of resilience that we provide for our customers. The headcount actually, from an IT services perspective, has dipped marginally for the quarter. But that is also probably because we have invested in building out a new team of software engineer trainees or trainees overall to change our pyramid over time. And on the BPS side, the BPS business has grown on a year-on-year basis. And the BPS side, there is a slight increase in headcount because of the holiday season and a temporary addition that you see in headcount to account for that. That are the two drivers of the headcount changes for BPS and for IT services. A small drop from an IT services perspective and a slight increase from a BPS perspective, driven by the holiday season demands.
Okay, I have a question that's come up on our feed, which says about your expectations as far as margins are concerned. Maybe Rohit, you might want to take that question.
I think as I mentioned, we'll continue towards a reboot and a rationalization exercise towards Q3, post which we'll drive towards a normalized Q4. And as we look into the next year, we are in the process of putting our plans together on growth on margin and organization, and there we'll have a comprehensive layout based on external narrative as well as internal organizational dissemination of that plan. So I think more towards April we'll share what our long-term plans are on margins given where we are, and share the details with all of you.
Fair point. As we wind down this conversation, Mohit Joshi, one final question to you as an IT industry veteran who's seen various cycles in this sector, and this is a sector that deeply impacts the lives of not just those who are directly working in it, but of so many other millions of Indians. And for them, what is the broader sense, this IT downturn, how long do you think it will last, and should we be concerned beyond a point?
Look, I think that's a good question. I've been in the industry, as you mentioned, since 2000, right? So I've seen several ups and downs and several cycles, whether it was the immediate aftermath of Y2K or 9/11 or the Great Recession or Brexit, and so many cycles. The one thing I can tell you is that this industry always comes back stronger than ever, because spend on enterprise technology has been on a secular increase for many years. The cloud still continues to be a great driver. Digital continues to be a great driver. Gen AI will be a new driver for this industry. So while there will be weak quarters and weak half years, the long-term outlook for this company and indeed for TechM is very, very positive. I have no doubts at all that the long-term outlook for the industry and for the company is extremely optimistic.
Okay, absolutely. The long-term outlook, that is positive. So that was Tech Mahindra's management for you. But coming back to the markets, well, it's a sea of red on the Lal Street. The low, remember, on Nifty is of 18,920. We are at 18,944 level as we speak. 178 points lower there on Nifty. And if you talk about some of the losers from today's trading session, Adani Enterprises, that's the top loser for you, 2.8% lower there. Tech Mahindra, on the basis of course, weak second quarter results, the stock is down 2.7%. 1112, that is the level on Tech Mahindra. Bajaj Finserv's one of the other top losers for you, and Axis Bank, that is the top gainer, the only gainer actually from the Nifty pack on the back of stellar second quarter number. So with that, it's a wrap, but you don't have to go anywhere. Just stay tuned. Lots more coming up for you. So stay tuned, and many thanks for watching.
Well, starting a company from a garage in Jaipur to becoming a multi-billion-dollar conglomerate to adorning a hat of as a judge in the Shark Tank India, Amit Jain has come a long way. And today we are fortunate enough, while the festive season is going on, to have him exclusively on Business Today TV. Thank you, Amit, for joining us. Very well. Thank you so much for joining us, Amit. It's been a long journey, starting from a garage in Jaipur to becoming a multi-billion-dollar conglomerate. You have 4 to 5 companies under your hat, 2 Shark Tank. Judge, that we'll come on to a later part. But tell me, how has the journey been so far? You've tried, tested, you've seen your failures, but how does it feel to really have this much success and as well as seeing failures at the equal end?
I think I'll say I'm grateful to God on providing me an opportunity to serve many and having a big impact. Journey has been full of failure, as you rightly said, but I would always treat failures as learnings. So fail हुए हैं but सीखे बहुत हैं. And I think that's the probably constant thing that has inspired me. It's not about years of experience. It's about how many experiences per year you take. कुछ लोग 5 साल में 15 साल का सीख जाते हैं, कुछ लोग 15 साल में 5 साल का सीख पाते हैं. तो getting yourself in the uncomfortable spot or zone where you have to stretch your learning abilities and you end up coming out as a much stronger, better person. I think that's what basically has inspired my journey. I'm a very hard-working guy, I'm a very perseverant guy, very resilient. तो वो क्या एक spirit रही है हमेशा कि कुछ दिमाग दिया भगवान ने, एक 2 हाथ दिए, कुछ बना लेंगे बड़ा. And that's what has inspired me to chug along all these failures so far. And I think there is some karma, right? If you do good to others, it comes back from in some other ways. I'm a firm believer of that. तो अच्छा गया सब कुछ. I think काफ़ी दुआएं मिली हैं मेरे को in this journey probably, and I think family का support रहा है बहुत अच्छा. So that probably helped me sail through.
So Car Dekho Group has definitely you have earned a good karma because you have given employment at a time when startups were coming up and they were booming. You employed a lot of people, and fortunately there were not many higher attrition that the startups are seeing today. I would like to ask you about the first vertical of the business that you've been pivoting around for quite a lot of time now, is the pre-owned car segment, the used car segment. What's new happening at Car Dekho Group there?
So we basically now are into insurance and bank auctions, and we do almost 12,000 vehicles transactions a month. On the other side, in auctions, we are basically cutting into more asset light and trying to have lesser burn model there, in which we are basically consolidating the team into one zone from central location, trying to run auctions across India. I think that has worked very well for us so far, and I'm looking forward to scale that up.
Absolutely. We saw the recent numbers. We saw that the marketing and the advertisement expenditure that was zoomed about 130%, and the loss has also been reduced. What are you attributing that to? Moving to asset light model, or cutting down on business expenditure? What's really working out?
Look, I think the pivot itself played a big role on we did not pursue the retail model, which was burning a lot of money. I think that is probably the predominant factor. अब हम लोग कर रहे हैं asset light, जैसे classified business कर रहे हैं, where dealers pay us a per month subscription for getting leads on their cars. Very asset light, more media sales business, very high growth margin. So we have basically realized where the profit pools are, and we are relentlessly pursuing them. And there's so much depth available that you can go so much deep into each of these.
Sure. And auto insurance and financing are 2 areas which has a lot of depth into. There's a lot of players already in the market. What new are you doing to get more of auto insurance and financing? Because we've seen your rupee model also, getting quick dispersals without any paperwork, faster money in the hands of people. What's differentiating you?
Look, I think Insurance Dekho will have a different mode. In Insurance Dekho, what we have been able to successfully do is generate a huge amount of trust across the country. We have got agents, 1 lakh agents across the country now who are using our platform. So technology at any solution we have built at Car Dekho Group has been the core of everything. So practically in Insurance Dekho, we have created a simple platform where people come in on this side as agents and we have got technology to train them how to sell health, life, motor. We do all kind of insurances now. And on the other side, we have got 42 insurers with all their complex plans added into the platform. But to the agent, we are able to serve what is right for his consumer, basis his needs. So that technology layer kind of helps. और second, I think it helps to build trust through हिसाब clear है. India में बहुत important होता है कि हिसाब clear है कि नहीं. So we have built an instant dispersal system that as soon as you work with me and you do insurance with me, the commissions are paid out instantly. And that बही खाता clear हो जाता है, तो I think that basically builds a lot of trust. Lastly, I think we have been able to enroll a lot of new to insurance agents who did not have this income stream. And that creates a lot of value because, finally the guy feels, I did not earn anything. Suddenly there is additional income getting created through this. And that has basically catapulted it. A lot of word of mouth happened. So acquiring agents has been a easier task for us given the fact that there's a lot of, positive word of mouth. Our channel engagements are insanely awesome. Lastly, we have set up a 24 into 7 claim desk. So any agent can have a claim of his local guy who is here insured. We have a full backup team helping to clear out that claim. And I think the trust that you build with such things with consumer, your agents, your insurance network, I think that has kind of helped us come this far.
Amit, how many agents do you have on board currently? And if you may also like to answer about the agents and also. We are in the middle of a festive season. How much growth are you anticipating with all the 4 verticals? Can you give us a number there?
Look, insurance, for example, we have 110,000 agents. And we are going to grow 100% this year on a very large base, right? So that's the plan on Insurance Deco. We should end up doing around 4,000 crore of premium this year. On the financial services side, we are again looking at a 65% growth this year. On a very large base again. We do right now at the current run rate, we do around 1.2 billion, that is 10,000 crore of disbursals from our platform. So, and we own 14% of market share there in used car financing, and the second best player will be 1/7 us. So we are by far the market leaders when it comes to financial place. Even in insurance eco, in B2B2C business, we are much ahead of competition, and I think that basically has been the core of build sustainably growing business. Insurance eco is near profitability. Financing business is already profitable. Our auto media business is again growing at 20% this year. Very high gross margin and 35% profit there also. So practically, I think we are in a very good zone right now. We also have another asset, College Deco, which is gonna grow almost 80-90% this year again, and profitable again. And then we have another asset in Southeast Asia with the name Auto.com, and that is also growing 100% this year. So I think I would say overall at a group level, given the blended ratio of all, we should grow around 70% this year.
Average 70% growth. I mean, for a startup right now, where a lot of attrition is happening, I think is fantastic. That's profitability. Yes. So I'd like to take a quick answer on the loss. Are you planning to equally reduce the losses?
Yeah, we have already done that. In the current run rates, we are looking very green on the parent level. There are some areas we are investing in, like Southeast Asia, a bit on insurance, but rest all other things are already profitable. So we are looking at a green balance sheet on the parent level this year itself. And on the wholly owned subsidiary, if I include, we should be near about break even this year.
Nearly about. So after how many years did you get break even now?
No, we were actually profitable for good 7 years. And then we expanded into multiple verticals and invested in various areas. That's when we actually went into reds. So it has been not like we have been constantly into we know there are investments we make and they give returns later, and that's what we have done. Invested in the right areas. Now, like for example, we invested our money into BFSI sector, insurance, finance. Now 87% of our revenue comes from these segments. So had I not invested this kind of amount of capital here, it's about capital allocation finally. Are you able to identify right opportunities around the consumer you're working with? तो हमारी जो जर्नी है ऐसी है कि जैसे जो कंज्यूमर है उसको चेज़ करो. अब कंज्यूमर गाड़ी खरीदता है, सेम कंज्यूमर अब इंश्योरेंस कराता है, सेम कंज्यूमर फाइनेंस पे गाड़ी लेता है, हर साल इंश्योरेंस कराएगा, फिर 4 साल बाद गाड़ी बेचेगा. तो हमने इसके अराउंड ही धंधे बना दिए सारे. So what that means is that you chase your consumer, build one thing good around him, then build the second one, build the third one, keep on incrementally going deeper with your own consumer. And when we did insurance, we started with motor. We realized the same guy who's buying a car also takes a private health or a life insurance. So we started that also. In the financing business, we realized, there are multiple banks we're doing. Still a lot of paperwork is involved. How about coming with a more convenient offering? So we launched Rupee, which is completely digital loans. So you can come, log in, and instantly we disburse the loan. So you can actually have a coffee at dealership, and you can take the car away, right? It's that instant. I think innovating on each side of, through technology, how can technology play a big leverage on the services you have created while making it more convenient for consumer and trustworthy. These are the pillars on which Girnar has been built.
Sure. Also, I'd like to ask you, what's your thought behind when you go in red? You mentioned that, 7 years you were good in green, but when you started investing that money into capital, that's when the balance sheet showed red. Does Amit Jain get scared when you see red and for constant few amount of months or years you see red balance sheets and thinking what would happen with geopolitical situations also? Does it scare you, and what is your mantra for getting out of that problems?
No, I think I have more than what I deserve, so I don't think I ever get scared. I personally think that we always ensure 2-3 things as fundamentals. That if required, we can make it green anytime we like.
Okay.
Right? That's the situation we are always in, because there are multiple arms of business which are already profitable. And there are some arms that we are investing for future, which are bound to make losses initially, which is fine. And I think it's a well calculated move. So we do plan for, how many years we'll fund how much to make this business what. And that's a careful planning we do, every annual operating plan. And I don't call them losses, I call them investments.
Okay.
Because had I not invested in these areas, the company would not have come this far. So making prudent investments is our core competency. और हमारा ट्रैक रिकॉर्ड है कि हम एक धंधा उठाते हैं, उसको बहुत बड़ा कर देते हैं, मार्केट लीडर बन जाते हैं, उसको प्रॉफिटेबली बना देते हैं. ऐसे मल्टीपल टाइम हम बार बार कर रहे हैं. चाहे हमने न्यू कार में किया, चाहे हमने इंश्योरेंस में किया, चाहे हमने फाइनेंस में किया, चाहे हमने साउथ ईस्ट एशिया जाके सेम किया. तो वी हैव अ ट्रैक रिकॉर्ड ऑफ सक्सेस अराउंड दिस. By making prudent investments, we are able to grow company by a significant number, and that's what makes me proud, on how we have been able to manage this kind of, prudent investments along with sustained growth. तो और हमेशा एक रूल रखा है कि 3 साल का पैसा बैंक में होना चाहिए. तो कभी भी हमने ऐसे नहीं होने दिया कि we are running into a situation where we don't have that kind of, cushion. Because that gives you a lot of comfort.
And also, you have recently expanded into Southeast Asia and Indonesia, Philippines. What are your global plans? The market is huge. Be it India, be it Australia, be it any market, car financing, car insurance, car buying will always be there. That growth will always be there. So how do you plan to expand and capture those markets where still the potential is still huge, just like Indian market?
We realized Indonesia, for example, is a market we entered 4-5 years back. And it's quite like India, unorganized. Per capita is twice of India. Population is almost 250 million. So practically we found a large country which can have that kind of a growth like India. So we entered that market 5 years back. Now we are the market leaders there. We do $500 million of financing in Indonesia. We are the largest new car player there with the brand Auto.com. And we then expanded into Philippines and Malaysia. So Southeast Asia is the first area we have entered. We may look to enter UAE this year, which we are evaluating, not yet confirmed, but that's something on the cards.
Also, Amit, great initiatives there, but how about you have great investors on board. काफ़ी अच्छे मतलब जो नाम के investors होते हैं, that you have them on board. Of course, to expand you need more money, more capital, and there's a limit to you giving out your stake and getting more investors on board. Are there any IPO plans that you have planned for the company, and if yes, for which company?
So firstly, I think we don't require any more capital raises in terms of investments, because we are a profitable company at parent level and very well capitalized, and all subsidiaries also have raised enough money. So I'm not looking at primary dilution. So I think the profit accrual should support the the investments that we need to make in the other areas, and if required we can raise separately also. Having said that, the IPO plans, look, what we have decided is that we don't want to come out as many other tech companies have come out. I would rather come out with a good profitability track record, 6 quarters of sustained profits, growing profit pools. ऐसे नहीं आना चाहता कि मैं बोलूँ मेरा 1 रुपये का प्रॉफिट है और अब मैं 5 साल बाद 100 का करूँगा. तो बेटर है 20 पे और बोलो कि 100 करूँगा. Come in that. So basically I think we'll time it accordingly. So my views will be IPO ready by next year. Having said that, it's a board discretion on when we will file, but likely from a readiness perspective, I think we'll be ready.
We'll be ready. Perfect. So I'll move on to a different aspect. You have adorned the hat of a Shark Tank investor, and you are one of those investors or a judge, I should say, that people relate to. You are known to be on the ground. लोग आपसे connect कर पाते हैं. So what inspired you to to say yes to Shark Tank and be a judge there, and first tell me that story.
So basically I realized that I'm having a sense of building businesses, having built multiple business within the Cardeco group. अलग-अलग टाइप की बिजनेस बनाए हैं. कोई डायरेक्टली B2C है, कोई B2B2C है, तो एक धंधे की पकड़ है. And I was having a decent amount of impact with a lot of our company people actually becoming entrepreneurs, either within the group or outside. So what I realized was that there is, a positive, rub off. And whenever somebody, leaves the job at Cardigo Group and starts his own business, I feel proud.
That we saw back in the last episode.
So I feel proud of that. And many of the people have done successfully well, very successful in their own startups. And that's what brings me pride that, people, touched our group, they learned those skills. So I realized that, while sitting in this company, I can have an impact on as many as I have around here, as the people I interact directly with, which is very few. But when you go to a Shark Tank kind of a medium, you're actually through the, picture, talking to millions of people out there who are watching the show and inspiring them. I think the kind of impact you can have is disproportionately high. And I thought, I should do my bit to give a big impact to the country. Entrepreneurship should become mainstream. मतलब हर घर में होना चाहिए कि माँ बाप खुश होने कि मेरा बेटा एंटरप्रेन्योर है. पहले जब मैं बड़ा हो रहा था तो फिर पापा बोलते थे कि अच्छी पढ़ाई करो, अच्छी जॉब लगेगी. अब माइंडसेट बदलेगा विद दिस काइंड ऑफ इनिशिएटिव्स. एंटरप्रेन्योरशिप इज बीइंग सेलिब्रेटेड. तो लोग बोलेंगे हाँ मेरा बेटा एंटरप्रेन्योर है, राइट. एंड आई थिंक दैट्स व्हाट आई थिंक विल हैव अ बिग इम्पैक्ट. लुक एट द काइंड ऑफ पीपल हु कम फ्रॉम व्हाट टाउन्स, Tier 3, Tier 4 टाउन से निकल के सक्सेसफुल एंटरप्रेन्योर्स आ रहे हैं, करोड़ों का धंधा बना रखा है. आई थिंक दिस इज़ द न्यू इंडिया एंड आई थिंक दिस इज़ व्हाट नीड्स टू हैपन इवन मोर. अगर आपको पूरी इंडिया की इकोनॉमी बढ़ानी है तो आपको माइक्रो एंटरप्रेन्योरशिप चाहिए. हर छोटे शहर में एक एंटरप्रेन्योर होना चाहिए जो धंधा बना रहे हैं वहाँ पर लोकल एम्प्लॉयमेंट जनरेट कर